All right, good morning everyone. So in this video, I would be explaining to you how what's it called? Um, so in this video, I'll be explaining how the FxMilk latest update works. So let's get to it straight. Pardon my voice, I've been a little under the weather recently, so please pardon my voice. So the latest version is called FxMilk X3, frenzy identification. So, I told you that in this new version, we have added um, the opportunity to use percentage risk. Okay, what we have here, you can see percentage risk per trade. You see, so, and over here as well, we had maximum daily loss to accommodate, what's it called? To accommodate prop firm rules. Okay, so I'm going to run a quick test on $1,000 account. So this is just a back test for $1,000 account. So just to show you, first I want to show you that the maximum daily drawdown works. Okay, so let's say we are going to be using percentage. So let's say we want to be risking 3% per day, which means we are having the opportunity of taking less than two trades, two straight losing trades per day, two straight losing trades per day. Okay, so we know that when one trade lost, that's 30% minus 30% of our starting equity for the day, and when the second what's it called loses, second trade loses, when that is negative 6%. So this is expected to prevent us from getting to 6%. So let's run it as fast as possible. The test period is from 2020. So you can see it's from 2020. So, and I wish I could show you some stuffs in here, but it's just really fast. Daily tracking tracks the what's it called? Um, Resets the drawdown stuff. So I want to assume that we would have enough drawdown here. So I'm going to stop it. And that's on the 31st of January. So let's check. I'm just going to stop now, because it is from 2020 and there's a lot of date back, if you ask me. So first, let's check the results here. We can see that we started with a lot size of 0.06. Okay, and if we scroll down, at some point now it has graduated to 0.07. That's to show us that our percentage risk per trade is already working. So I do not have to set the lot size. It sets the lot sizes for me. So I'm looking for where we had multiple drawdowns. Okay, which date is this? This is second month, 10th day of second month. So let's check 10th day of second month. Oh, excuse me. 10th day of second month. Come on. It's just scrolling as fast as possible. I don't want to take our time because we still have. All right. So it should be here. It should be here. It should be around here. So um, on the 10th, okay, this was a profit. Then we had one loss. Then this would have been the second loss, but it was not on the same day. You can see that the day has changed from 10 to 12. So which means this was a weekend, and the loss was right in the morning of the new week. So that invalidates that. Then secondly, we also have just one more SL. And that even SL was not even for the day as well. So that one could not fit into our criteria because the trade transcends into multiple days. So let's check this place. On the 19th of February, 17, 18, 19. Okay, we are far from 19. Okay, so on the 19th of February, we can find two, okay, 20th of February. So before the first sell, SL, the second sell, and SL. So on the 20th of February, these two SL, I'm not sure. Let's do the math together. If it amounts to 5% of 1,000, no, it does not amount to 5% because this 22 plus 22 is 44. It's 44. And excuse me, this is 1,077. So to reach 5% is going to be $50 minimum. So let's see if we can get a third drawdown for the day. A third drawdown for the 20th. No, we didn't. We did not get a third drawdown for the day. So I'm really finding it too hard to excuse me, to get what we need. But you know what I'll do is I will change this. I'll change our risk per trade to, let's say, something higher than our maximum drawdown. So our risk per trade is going to be 10%. So, and then our maximum drawdown for the day is still at 5%. So, which means we are not expecting a trade to get to SL before it closes. So, we're not expecting the trade to get to SL before it closes. Still waiting. We are waiting. So, we're not expecting the trade to get to SL. I want to see those massive reactions, massive, up and down like we had before. Okay, let's observe this area. Okay, this looks good. On the 31st of January. Okay, that's multiple closes without hitting SL. Let me stop so that we can easily analyze. On the 31st of January, am I right? I think so. Yeah, 31st of January, let's check. All right, so our stop loss, let's check this first. You can see sell. It did not hit SL, but it's closed. And I'm certain that it's closed because of the maximum stop loss we set. Now, risk per trade is 10%. 10% of 1,246 should be $124, but it's closed at $88, so which is still saving us around 40 something dollars. So which is going to be, if we do the math, probably about 5% drawdown. So looking at the fact that we started at 1,246, let me get the calculator. Okay, so 1,246, 1,246. What's the 5% of that? Times 0.05. So that should be 62. That's 5% should be 62. I will go to 88. I don't know. But it's still relative. Oh, yeah. The probable reason why we got to 88 is that I observed as well in the what's it called? Analytical calculation. It considers value per pip. And value per pip of USGD is not 1 to 1. So I think it's about 1 to 0.7 thereabout. So that's where there's a little bit downside in the maths. There's a little bit downside in the maths. Even if you check the maximum drawdown, you observe is almost the same thing. Now look here, this is pretty close. Okay, so this is 1,100. All right, and then it closes at 55, which is 5% of 1,100. This is 1,179. This closes at 29. So at times the variation might be there. And another thing that causes possible variation is, market movements, maybe news and anything. And if you check 1508, majorly, it's a volatility time. So it's nothing to be bothered about. So you can observe that this closed on the 3, and there was no new trade on the 3. And now on the this was on the 4th, and that closed, there was no new trade because it prevented it from trading again. See, you can see it says all trade closed to due all trade closed due to daily loss limit. So it prevents trading for that day henceforth. Now it keep writing all this because it's trying to take new trades for the day, but it says no, no, no. So it's closing all trade due to that. So let's check just check some tabs for checking the tabs for any other updates that might be necessary. So max daily loss reached, cannot open new sell trade. So the market or the AI was about to open a sell trade here, but of course it says max daily loss reached, cannot open a new sell trade. So and every other running trade has been closed because of maximum daily loss. So this is exactly what I intended to show you. and I believe you have seen it. So now let's just go to showing the potency of what this new version can do. Like I told you, we get we get new traits, we get more traits rather than the usual version. So what I'm going to do now is that I'm going to be conservative with my $1,000 capital. Okay, so let me say my maximum drawdown is going to be 10%. Okay, maximum daily drawdown, sorry, maximum daily drawdown. And I want to risk, let's give us 5 trades in a day. Let's risk 2% per trade, 2% per trade starting from $1,000. So let's see how far that can get us. I would have done 5%, but let's start with 2% per trade and let's see how far that can get us. It's probably going to take a while, so I would pause um pause screen share. I'll pause recording. So after which then we can resume. We can resume after it is done. So I'll pause the recording right now. All right, so I decided to um quickly show you this because I thought it's best if I show everyone this. All right, so if you observe the market within the start January to what month is this? I don't know. Come on, show me. Okay, to March, you observe that the growth rate was very poor because at least we started from $1,000 and till March we are still having, that's 3 months. We just had $50 profit, and that was in January 2020. It looks really, really unpromising. But like I've always said, consistency is key. Okay. That same March, we entered $1,200. That same March. That means profit that we couldn't make in 2 months, we made it in 3 months, sorry. We made it in 1 month alone. We made it in 1 month alone. And what's this? This is still March, $1,300. And this is still March, 1,005. So, like March alone, which was even the start of COVID, was able to give us all the profits we probably would have been hoping to make by January to March that we did not make. But March alone gave us like 50% of our account straight up. Okay, this is already going to, but March gave us 50%. Yeah, we saw March. Yeah, March gave us 50% of our account straight in just 1 month. So it shows that we can even get up to 50% in 1 month when we are using percentage risk. So this is just me using 2% risk per trade, which means I am giving the AI opportunity to take 5 trades in a day to reach my 10% maximum daily drawdown. And the beauty of auto lot size calculation is that if you are in a drawdown, it reduces the lot as well. It doesn't continuously use the same lot size and continuously get the same poor or good result at the same time. So if the result is good, your lot size increases. If your result drops, the lot size drops as well to ensure that we are in between the balance. Okay, 2% is 2% risk per trade. Nothing is going to stop that. So if you observe as well, we also want to have a drawdown here from 1,650 to 1,531. That's about $100 drawdown. Now, this is one of the reasons why I'm always like, okay, start with a meaningful capital. Okay, many people will be like, can I start with this small amount? It's not like the AI will not trade small amount. As a matter of fact, I tested this. I will be realistic with you guys. I tested this AI on a $7 account, and it took this $7 account to $21 as I'm speaking to you, and that's in the space of 1 month. So that's like 3x in 1 month. But it's not like anybody cannot do that, but the result doesn't look meaningful. How much is $13 extra that is adding? I hope you understand. So, but that was not even the point of everything we are saying right here. The point of everything we are saying is that your capital determines how well you make money with this system and how much you can persevere, okay, in terms of drawdown, because there will be drawdowns, okay. Look here now, from 1.6 to 1.5. Look at this place from 2.1 to 2.0. Like we are losing like $100 on each drawdown section. So, and of course, it is relative because this is percentage risk. So it is relative. It doesn't mean that if I lose $100 I will lose $100 on a $100 account. No, I probably will just lose like $1 on a $100 account. Okay, so it's relative. It's because I'm using $1,000 account. That's why I'm losing like $100 at a time. And because the percentage risk is the risk is percentage based, not fixed. All right. So we are currently sitting in at a profit of $2,600 in 2021, fifth month of 20, which means within 1 year, we've been able to double, more than double our capital, risking just 2% per trade. Risking just 2% per trade. Okay. Now, one thing about me is that I'm a very massive risk taker. Okay. Ever since after I finished developing this thing, I put one account on it and guess how much risk I'm risking on that account? I was risking 20% per trade. I even maximum daily drawdown. I said that one is none of my business for now. I put that one at 100%, which means I'm ready to lose all the account in 1 day. All right. So now this is not advisable. Okay. I'm just telling you about what I did personally. That is not something I'm going to advise you to do, except you want to do it yourself, as a matter of fact. But the account I'm talking about is currently sitting at a $20 20% profit. Sorry, not $20 profit, 20% profit right now. So 23% to be more precise. 23% profit to be more precise. So it depends on how much risk you are willing to take. Okay. I always tell people any funds you are putting into your trading account, let it be funds you are willing to, let go. So let's check how much do we lose from here? From 3,000 to 30,000. So we lost like $200 over there. Excuse me. In drawdown. Okay. Okay, let's maybe I should pause the video. We are at which month now? 2022 January. So within 2 years, we started with $1,000. We're at X3, almost X4 of that. And the beauty of percentage risk is that it just keeps going higher. Yeah, excuse me. It keeps going higher in a shorter period of time. If you observe the size chart here, see it takes a longer time to get to the next lot of 0.5 from 0.4 to 0.5. So it took us 3 months to get to 0.5. How long did it take us to get to 0.6? We got to 0.6 in just 1 month. That same match. Okay, now to 0.7, 0.7 should be here. 2 months extra to 0.7. Though we've had some 0.7, but of course, 2 months extra to 0.7. Then where are we here? We are still at 0.7. Then we move to 0.9. So we've missed 0.8. See, 0.8 didn't even take a lot of time. Okay. So as I'm speaking to you right now, we might probably be running close to maybe 0.5 thereabouts. So 0.15. And where are we here? 0.19. So 0.2. So it just goes like it goes up really, really fast, really, really fast. Your risk increases as the profit increases. So now it's not risking 2% of $1,000, which is $20. No, it is now risking 2% of $5,000. Okay, so that's going to be like $100 thereabouts per trade. So the drawdown also will be relative to that figure because of course it is losing relative to that figure as well. So that's just one thing about that I intend to share with us. So let's pause the video once again and I will see you at a much. So right now we're at 17,000, 18,000, 19,000. From there, this is where the figures are 20K from 1K. And which year are we now? We are in the year, we should be maybe in 2023 thereabouts. Come on, show me now. No, it's moved so fast. Yeah, we're at 2023. Second month of 2023, which means we just started 2023. And you can see our $1,000 capital has moved to like $28,000 with the power of compound interest. But the problem is, how many people would wait 3 years to multiply 1,000 for 29,000? How many people? Not many people, as a matter of fact. I don't even know whether who is speaking here, would do that. Not many people. So this is almost $30,000 right here, and we're still going higher. There's a particular song says I'm going higher. Yes, I am. So let's hit 30K. Then I'll probably pause the video again. All right, 30K. I'll pause the video. I'll come back some sooner. All right. Did I get that paused? I think I did. So we're currently at 60. $1,000 from $1,000. That's over 60x. And that's about 6,000%, 60,000%, I think. Yeah, so just thought I should show you. So, when you start, by the time you get to the point when you start using one lot size, it starts getting better. Okay. 2023, you start using one lot size. And 2024, third month, you are already at two lot size. Okay. So we're already at 2.5 lot size and we're at 60 something thousand dollars. So I'm not sure whether we can get 300K. Well, so maybe, because it just gets better. It's 70,000 and we're almost done. Yeah, we're almost done with our test. So let's see it through together. I don't want to waste our time. That's why I'm pausing the video. So that but at 70,000, how much I will be risking per trade? 2%. So 2% of, let's say, 90K, where we are now, is going to be close to $1,800 or $1,000 thereabout. So imagine risking $1,000 per trade. So imagine what kind of results we'll be getting. So that's just the beauty of it. That's just the beauty of it. So we are averaging $300, $400 in on a single trade. $300, $400. So it's going to make the growth really, really fast. I was hoping we could see a minus. Look at this. We are risking $1,300 on a single trade. $1,300. And you know what kind of financial level you'd have been to be risking that much. And now we're at $100 plus, 100,000, sorry, plus 128,000. It just keeps going massive, massive. I don't know. You have to explain to EFCC that you started a business with $1,000 and in 5 years you've grown it to 150 something thousand dollar. 1,000 to 150 something thousand dollar. You need to really explain. But we have evidence. So this one now, you don't need to explain. You just need to show them evidence that, okay, this is what I do. And I'm currently looking at 200K here. Are we getting to 200K before the end? Yeah, I think so. Yeah, 200K. You can see the figures down here. 200K, 220, and it keeps going parabolic. Like, when did we get to 200K? That we are now at 220. All right. So 220 it is. 220 it is. 220 it is. All right. Let's check our report. Let's check our report. We have a profit factor of 2.4, which is fucking massive. Our maximum drawdown of 3%, relative drawdown of 11%. Okay. And this is one thing I always consider most, the absolute drawdown. So which means in our $1,000 capital, the only figure which we tend to lose or which we tend to, feel as part of our drawdown is just $6 from $1,000. So we had a total of 4,646 trade and we won 85% of our trades. Okay, we won 85%, we lost 14% of our trades. Okay, and that is massive. Tell me, this is not massive? And let me bite you like Suarez. So largest profit trade was 1,831. Largest loss trade was 3,346. And average profit trade is 97. Average loss trade is 245. Maximum, this is the part I always love. Maximum consecutive wins, 96. Imagine straight 96 wins, almost 100% win. Straight 96 wins. Straight 96 wins. Straight 96 win. Look at that. That's massive. That's massive, baby. Maximum consecutive profit. So we had a total of $29,000 at 37 straight runs. So this run is different from this run. That means another 37 straight runs. Maximum consecutive losses. Maximum consecutive losses. Just 4 consecutive losses. We lose this trade. The next trade was a loss. The next trade was a loss just 4 times. And it gave us $4,000. The maximum, that is in money, value in money, just 2 trades. And that's giving us a 6,000. And as of that 6,000, probably should be sitting at around $200,000 thereabout. So that's the statistics from this test we just ran. Profit factor of 2.4 is massive. For those who know this, the value is massive. As you can see, my modeling quality always all green. All green. Might tell you not available because I had to transfer it to this PC. But bars in test is 125,000 bars. And my tick model is about 44 million ticks. 144, is that 144 million or 14 million ticks? So total net profit of 218,132. 218,132. 132. So if we add our capital, that's going to be 219,000. So that's almost 220. So I could comfortably say I move $1,000 to $200,000 in the space of 5 years, 2020 to 2025, because that's the state statistics. You can see 2020 to 2025, January to 2025. And the statistics is massive. It's massive. It's massive. It's massive. It's massive. So we got to a point where we are just risking 8.7 lot size. I don't want to take our time. I don't want to take our time. If we add by mistake or deliberately decide to risk 5% per trade, I mean, this is not what we'll be talking about. All right. This is not what we'll be talking about. And I could just leave this at 10% maximum. So just two trades, and at the end of the day, you lose two trades and you are out. Okay. I mean, just take this, but I won't record it. I won't record it. I'll just put this running, and maybe I'm not sure. I may join into the video so that we can check the status. So it's still $1,000 capital. Like always, it's still $1,000 capital. The beginning is always humble. Like it has a very humble beginning. You can see it has a very humble beginning. So the beginning is always humble, and before you know it, it's just going massive. It's going massive. It's going massive. It's going massive. 5% risk per trade is going massive, and before you know it, we are talking. It gets to a point where the backtest cannot continue because you are literally making like $500,000, and it requires to risk 5% of $500,000. It requires a lot size of, I think, $50, 50 lot size plus. Okay, 50 lot size plus. And the way what's it called? MetaTrader is not even MetaTrader, I think it's IC market. The way IC market is wired is programmed. You cannot trade beyond 50 lot size. Okay, so then the AI starts telling me that, Oga, I beg you. And that thing doesn't take long. Oh, I'm serious. It doesn't take long. So the testers start telling me that, "Ah, I'm sorry, I can't go higher. I can't get to trade." He starts giving me error 131. So it just goes like that. It just goes on like that. So I don't want to take our time showing you that. Of course, we can see the result already, and this is still 2020 because we are risking 5% this time. Third month, we already had doubled. We already had doubled. We had doubled our capital already by the third month. That's just 3 months. Pam pam pam. I've already doubled our capital. In 5 months, we have doubled our capital. We're almost going to like 3x our capital already. You know that kind of thing. So it's just like that. So this is it. And this time around, we are giving clients the liberty to say, okay, let me risk this amount. Total risk for the day. This is my personal risk, per trade. You have seen it yourself. You have seen it. There will be days of drawdown. I'm not gonna lie you. Excuse me. Excuse me. There will be days of drawdown. Look at this. This is 2008 down to 2002. That's like, is that now $500-600 drawdown? Yeah, because we are risking 5% per trade. We went up quick, we came down really quick as well. It doesn't matter. But what matters is that we are staying consistent. Look at it. This chart now, it looks like we are in if you're a trader, you should analyze the chart. We are in consolidation. We are waiting for a breakout. Are we breaking down or we are breaking up? Looks like we break up. Do we get a retest? A retest? Yes, yes, a retest. Yeah, can we break the high? Can we break the high? Yes, we're breaking the high. No, no, not yet. Double top, double top. That kind of thing. Oh, triple top. What does triple top says? Triple top says we are coming down. Oh, really? Yeah, that's what triple top says. It looks like we are coming down, but we have a support here. Okay, I'm just doing like an analyst right now. Sorry, I'm just having fun with that. So we have a support here. The support is holding. The triple top resistance is also holding. Let's see how are we going to break out. How are we going to break out? Man, I think Jim Beglin and Peter Dory should really massive breakout, man. Look at what happened. We grabbed liquidity. We grabbed liquidity. As we grab liquidity, the massive breakout. The massive breakout. Look at everybody's stop loss has been triggered. Everybody that is putting their stop loss below the support, their stop losses has been triggered. And what are we experiencing? We're experiencing a pullback. Like we know the market can always keep going up. There has to be a pullback. And look at the pullback right here. And we are still going. We are going. Another pullback. Little correction. Little correction. Oh, double top. Double top again. Double top again. Oh no, just look at that. That's a fake top. That's oh my come on, come on, come on. I'm getting good at this. I think I should probably change my calling from forex trading and automation building to, commentary. commentary, football or treat commentary, something like that. Okay, so what do we have here? Oh boy, you are just going up. Oh. I don't even know what we have, oh, but I think it was fun doing that. Let me see if I can just pause the video, come back oh, let me just see. I'll come back at a point where I know by the time we get to halfway here, we probably would have been sitting at $500,000. And of course, doesn't look like it. This is just 7,000. How do we now get to 500,000 within halfway? It looks like it does. It's not like it, but so what do you observe here as well? Sorry, let me just put this in. Market just moves in its way. And then we had a peak here, a peak of 7,000 plus, yeah, 7,001 there about. And we had a massive correction of 6,000 down to like 6,007 or 6,003 thereabout. So the corrections will always be there. Okay, but understand that it is relative to what? To your percentage risk. Okay, it is relative to your percentage risk. So don't expect that maybe you'll be losing $300 directly if you are risking if you have a $300 account. No, no. If you have a $300 account and we set the same settings for you, the AI will understand that this is a $300 account. The lot size I have to use is going to be relative as well. So it just goes like that. So we're like from 8,000 down to like 6,000. That's like from this is about 8,000 to like 6,000. And of course looks somehow like okay, what kind of system is this? Somebody will say like, what kind of system is this? Now, which kind of drawdown is this? But we are not guaranteeing you that there wouldn't be drawdown. No, we don't do that. We don't do that because we don't own the market. There will be drawdowns. But what we can guarantee you is that even in the midst of drawdowns, you make money. Because market will always what? Still go back to our way. Market will always still go back to our way. Look at that retracement. Look at a massive retracement. And what's gonna happen? It's going to create, is it creating double bottom? Yes, double bottom. Have we break the neckline? We broke the neckline. You know now. What do we do? Wait for the retest, and that's it. And that's it. Look at me analyzing backtest result as if I had a nice chart. Well, it's because we don't pay for this industry, so you understand how this shit goes. And of course we are at $18,000. Are we almost half? Are we almost half? Yeah, half should be here. Can we get to $500,000 with half? I'm not sure. I'm not sure. But let's see. Let's see how much we get by the time we are here. So let's put it around this $26 area. We are still at around 1920. And the drawdowns are hitting as well. The reason why the drawdowns look so obvious here is because we are risking 5%. If we're risking 2% or 1%, it won't look so obvious. Okay, and of course, our profit wouldn't have reached $25,000 right here. At least last time I checked, we are having $25,000 around here. We have 25,000. Just look at the crazy power of compounding. We have $25,000 around here, and we're having like 100,000 plus, 200,000 plus around here. Look at the short distance. Look at the short distance, but that's the crazy power of compounding. So we're still waiting for this 626 area. I want to see by the time we reach there, how much would we have made? How much would you have made? How much? How much would we have made? How much would we be risking? We're at 40. At 40,000, we should be already risking one lot size plus. Yeah, we should be risking one lot size. We're even risking at around 3 lot size. So it's going to be massive from here henceforth. It's going to be massive from here. We're already risking 3 lot size here. So let's see. Are we there? We are almost there. We cannot get to 500,000, brethren. We cannot get to 500K. But we should get to 100K at least now. Before we reach it, I beg, no for my hand. No, 5%, 1K. No reach, no reach. No, even if we no reach, we could suppose reach 100K. Like, guy, ah, we never even touch 50K. Oh. Okay, we don't touch 50. We don't touch 50. God negotiate us. Okay, that's it. We are here, we are halfway. We are halfway, and we are at 50K. Okay, I probably took 50K for 500K. But I can assure you from what I'm seeing here, we should hit 500K before the end of the whole test. We should hit 500K before the end of the whole test. We should hit 500K before the end of the whole test. We are currently sitting at 70K. It's getting better, man. Come on, come on. Before we even hit this C area for current, we should be hitting 500K. Like, I don't want you guys to see that possibility. I could have used 10% to make it faster, though. But come on. Come on, we can get the results. Come on. 80K. Yeah. You are doing it. Give me 90. Fuck. Fuck. Look at that. I was hoping for 90. Bro went and gave me 180. 200k. Okay. 500k is sure. Nothing you won't tell me now. 500k is sure. 500k is sure. Before we get to this C, 500k is sure. Like, look at this spike. Look at this fucking spike. 2022 on the 10th. 1910. 2410. Just few days. And look at that crazy result. Look at that crazy result. Now we're at 400. I told you guys. I told you. I gave the signal. It's a buy. Now that's where we are. From here now we cannot get to new trades. You see? Invalid lot size for buy trade. Volume is greater than the maximum allowed. So maximum symbol allowed value is 50. 50 lot size. So we couldn't take more trade, as you can see. Symbol volume maximum is 50 lot size. And we are trying to take trades beyond 50 lot size here. So if you check the results here, let me quickly stop it so that you can see where we are. Because this one will just keep going. So I was hoping we'd do it before 6 here. And look at where we got it. So when I tell you this thing is fucking possible, it's fucking possible. That's 500k. That's 500. And at this point, now, like now, if it were to be live account, what you just have to do is withdraw. Abby, what else? Withdraw like 50%. Let it continue with, you know, 25 lot size again. Withdraw like 200k. Or if you don't want to withdraw, you can probably reduce it to 1% so that to still be, trading around 20, 30 lot size per trade. But what I was trying to say, we have been able to achieve it in a shorter period of time. So with 2 years, and this one you go now, you will explain to FCC. Because within 2 years, you started a business with $10,000 and now you're sitting at a comfortable $500,000 and you want to wire the money from IC market to your Nigerian bank account, that kind of thing. So one thing that will pay me is that if I did not switch on my mic, okay, my mic is working. Since morning, we don't dey talk, we don't even do chat analysis with you guys. All right, it's a Monday morning, everyone. This is what I do for a living, so you don't mind me if I, just sitting down here and not really pushing this thing as fast as possible. So let's check our stats one last time before we leave. Um, we use the current spread, and it happens to be two lot size, two pip spread, as at the time the stuff started, and bars and test, ticks model. Net profit $508,211.34. Maximum drawdown is 36,540 something, 9% sure. I don't get mine for relative drawdown of 28%. Why do you think the drawdown figures increased? Because I think last time this was 30% and this was maybe 15%. I can't remember, 11%. Yeah, this was 11% last time. I think the reason is because we increased our risk. Yeah, we increased our risk as well. So that's why we had this figures. And from our excuse me, excuse me, what matters most. Sorry, I'm under the weather, so my apologies. What matters most, like I said, is the absolute drawdown. Okay, from my capital, how much did we risk at all, which is $15. Okay, from my actual capital of $1,000. So we have to stop at 2,193 trades. And the largest profit gave us $23,000. Bro, bro. Largest profit gave us $23,000 at a single trade. And largest loss gave us $14,000 on a single trade. Okay. So average profit was 411. Average loss was 1,160. Something maximum consecutive win. You see this 96 period, this 96, I am certain, I am 100% certain it happened around here to here. It happened around here to here. There's nothing you won't tell me. It must be there, and let's see, let's trace it. Trade trade 13th of 10. No, it's not even 13. I think it was, let's say 7th of 10. No, I'm looking for a round figure. Okay, 2600. Trade number 2609 at a balance of $72,000. Okay. And trade number 2,718. So 609,718 is approximately $100. 100 number of trades around here. And give us 177. So this is where that stuff happened. This is where it happened. Nothing where you won't tell me. You are going to believe. So 96 trade and giving us straight $104,000 profit. So consecutive losses is just five, and consecutive maximum loss in funds 28,000. Two trades losing us 28,000. Maximum consecutive profit 43 trades. Another 43 trades gave us $130,000. Man, time, time. All these things is achievable with just time. Okay, so we can't go back to 2020 to the start, but we can. We still have 5 years ahead of us. Right, this 2025. Let's make a vision 2030. $1,000, 2% risk. $1,000, 3% risk. $1,000, 5% risk. 10% overall drawdown. Mind overall drawdown 40%. Okay, mind overall drawdown. Like, okay, if you lose day one, you lose day two consecutively, you lose day three consecutively, which we do not even have here in backtest. So far, we don't have such in backtest. But should it have happened, at least let's say we lose 4 days consecutively, and then I can say I'm withdrawing and I'm not doing it again. But we don't have that yet. So, and we cannot achieve these results. I always tell people these results are achievable, but people feel like, come on, come on, come on. Put the capital. But let me put the AI. Let's see if the result is not achievable. So that'll be all for now. Thank you everyone for joining me, and I'll stop recording.